Hey guys, we were looking great in Dash as of the last update, but things have taken a turn back downwards. So we have a setup in place that could take us lower, but it's not yet my primary. And I'll explain why with the structure we have. The same holds true, not just for Dash, but across the crypto space, all the altcoins. And we actually have some resemblance in cryptos to what we're seeing in the equity space, in which we have a big clear three-wave pattern up, but we've had a really deep fourth wave pullback, which can, of course, increase the risk of more downside. So this is the 1 hour chart in Dash. And well, we got our third wave top back on March 23rd, and we haven't really seen anything constructive since. This looked like it could have been a nice clean fourth wave back on April 1st, April Fool's Day. And we had a nice bounce, but it was a fake out, and we've had a lower low. So we've invalidated the impulsive structure, the definition of which would include a fourth wave that's relatively shallow and would not have overlapped the first wave peak. We definitely overlapped it. And the patterns within the subwave structures can easily pass as three-wave zigzags. So the fourth wave that we've had is no exception to that. I'm going to call this here a zigzag A wave and possibly some kind of a weird ending diagonal kind of C wave, something like that. This could fit the description for an impulse. And we look at our MACD, MACD. We do have a divergence from the April 6th low to the more recent low on April 11th. So that is a good sign that we have bottomed. And we have seen similar in the equity space with small caps, especially the Russell 2000 and the Dow and the S&P 500 all show similar patterns. So what we are looking at as our primary bullish pattern is orange, which corresponds to the green on the big picture chart, which we'll look at momentarily. It means that we should see a higher high for the fifth wave. If that happens, we will have 5 waves up. And, it's not the most bullish interpretation, or I'm sorry, the most bullish setup, but a 5-wave diagonal to start off, a leading diagonal, is still better than just a zigzag up. That's where we're standing. So the alternate view is that we actually have an A, B, and a C up that is notated in red. And so far, that would also mean that we have a first wave down of our bigger C wave that could take us down. So what this refers to is that this top is probably a micro fourth wave within a larger C wave that will look again in the bigger picture. And we have ourselves at least a leading diagonal down. It could be counted as a 5-wave structure. You could call this a 1, a 2, 3, 4, 5, or even a 1, 2, 3, 4, 5. It's messy to say the least. But either way, that would have this as a first wave, and we would be presumably in a second wave bounce, and we have lower to go, and the lows would take us somewhere south of $70. Could be $60, could be as low as 54. On the big picture, I believe it was 61. That was our ideal extension. So the setup we have could launch us down there. Now, if you're worried about losing some profit, if you'd like to take some chips off the table, I would expect us to get this bounce for the second wave, especially in a corrective wave situation like we're seeing here. I would expect a relatively deep second wave. So we could bounce all the way up to $120 plus. This red pattern does not officially invalidate until we get to this green line here, which is notated here. If we break this green line, then we're pretty much out of the woods for a while. That would indicate we have 5 waves up. Then we'd have to have a higher low, and we'd be off to the races. Otherwise, if we don't exceed this green line, that's a danger warning right there. If we struggle with this green line, don't get anywhere near it, and we start pulling back, that may be a time to take some chips off the table. I know I've mentioned that myself. I may take half my chips off the table, half my coins. I don't know exactly what my strategy will be yet, but that would take, again, a corrective 3-wave bounce up that does not exceed the green line here. And then we need to see some downside action. Now, whether I would wait until we got to the bottom of this first wave here, about $99, or I would wait until we get to the main support down here, I'm not totally sure exactly how I would stage my exits, but I'll be keeping you guys posted on what I'm going to do. So other than that, though, again, we are still primary green. This is just, again, the probability of a lower low has gone up. It does not mean that I think we're going to crash. The green is still my primary. And here we actually have green and purple as our more likely bullish patterns. And the only difference is the rally structure. One is a diagonal, one is an impulse. I'm not going to go into too much detail about that here like I did in the last video. I'm going to highlight, again, the near-term potential for some downside. So again, our divergence in the MACD is still holding. It looks fantastic, perfection. Dash does have one of the nicest structures in the cryptoverse. And in addition to that, it also has one of the most robust setups upwards. Again, I'm not going to harp on that too much because I already have in many of the other videos. And it often gives us an initial indication of a shift in sentiment across the cryptos. So when we look at this again, we had our lowest low on February 24th, as did many of the other altcoins. And we clearly have, we have 3 waves up. You can't count this as a 5-wave pattern no matter what. And presumably we are in a 4th wave at the moment. So that being said, if I build up our Fibonacci projections from what I'm calling the 1-2 here, put that together, we've actually gone more than high enough for this to be, it's actually pretty extended for a 3rd wave. It could mean it's a C wave, whatever it is. If this is really an ABC off, then again, we got that $61 target below. If we do start falling, I'd expect to be relatively swift and quick because, we've been falling for a long time and there's only so much bear sentiment left. The selling pressure will disappear real quick if we do end up having that lower low. Otherwise, I would expect us to get in this box overhead. That has not changed at all because we haven't invalidated anything yet on the big picture. 212 would be the minimum target if we do have a bigger rally. And the way this is shaping up, I would actually expect this, if this does end up being a 5th wave, a 5-wave extension, a 5-wave leading diagonal, and we have a relatively deep retrace, as I'm showing here, that does project in this green box. So again, it could be a 1, a 2, and then you have 3, 4, 5 getting in this box, something like that. That's what I expect. There is an alternate perspective here that one of my viewers pointed out to me, I believe in the last video I did, probably EOS, and that perspective is that this whole thing is actually a 1st wave. How can that be? Well, we have 3 waves up. The structure, the bullish structure that would have 3-wave subdivisions, again, would be a diagonal. So this actually could be a 1st wave of a much larger diagonal up. So that could look something like this. So if we build out our Fibonacci extension to the top of that thing, and I'm going to move this a little bit over, it could look something like this. I'm actually going to draw this out. It would be 5 waves, but each of the component subwaves would be 3-wave patterns. So something like that. If it is a diagonal, we wouldn't project as high as for an impulse. You'd have these really deep retraces that would overlap and then maybe have a blow off, something like that. So we could see something a bit like this. So 1, 2, 3, 4, 5, with each of these subwaves within it being 3-wave corrective waves. Absolutely a possibility. I wouldn't like to see this in the equity space, but it is actually an alternate there as well. I'm actually going to pull up the Dow real quick just to shed some light on what I'm talking about. So on the Dow, we have had 3 waves up. I'm actually going to shift this to the 30-minute view. And so clearly 1, 2, 3, really deep retrace. We've overlapped the top of the 1st wave. So we may see something similar. Either we have a 5th wave left, or this entire thing is a 1st wave and we've just about finished the 2nd wave. And we're going to have another zigzag up for the 3rd wave. So again, there's been a lot of correlation between cryptos and the equities when it comes to inflection points. And it's something I track on a regular basis. So I'll have plenty more updates coming. In short, if you are possibly thinking about taking some chips off to reduce risk, look for that bounce into our gentleman's exit box. Again, that falls between 114 and 123. 2nd wave. However, it could go as high as 138. As long as it doesn't break that line, we have the downward setup in place. You can exit there. You can exit in tranches. Or if you're planning to hodl through the whole thing, get ready to hold on, commit to it. Don't chicken out once we get below the red line. You don't want to sell low and then buy high again later. Although there's going to be a lot of meat left on the bone in the future. And of course, this green line that sits at 138.36. If we can get through there, the downside immediate setup is dead, and it makes it far less likely that we're going to have that lower low after all. So again, exciting news for cryptos, and exciting doesn't necessarily mean good. It could be good or bad, but we should have at least some good clues in the upcoming week or so. That subscribe so you don't miss my updates on that. I'll have plenty of community posts highlighting what's going on, even if I don't get videos out for your particular coin. And if you enjoyed my video, please give me a like. Until next time, thank you for watching and happy trading.